Hello, fellow Rebel Capitalists. Hope you're well. I am here today with Jeff Booth, my good buddy, Jeff Booth. And every single time he and I sit down and have a conversation, whether it's on the camera, whether it's just sitting down at dinner, which I've had the privilege of doing several times, it's just a real privilege and an honor. And I always go away from those conversations being a lot smarter. That's for sure. So I'm really looking forward to this today. And Jeff, thanks for coming on the channel, buddy.
Thank you so much. And for that too, because I feel the exact same way. We're just before camera. The thing that makes you so special in this, I think you care about the exact same things. Your audience cares about the same things. You're trying to help your audience get there. And what makes, I think, our interaction interesting, I look at it as if we care about the same things, what are we not seeing in each other's perspective? That is,
I don't think there's much variation there at all. And it's not just what's best for the audience. I think both of us, and we throw Lynn in there as well for sure, is we all come down on what's best for society. Like what can we build? And that's what you guys are in the thick of. And I want to get into that later in the conversation. You guys, you and Lynn, don't just sit and talk about this and pontificate on Twitter. In fact, you're rarely on Twitter. You guys are boots on the ground. You guys are in the trenches. You guys are actually taking action, and you're putting your money where your mouth is to try to build a better world. And whether you like Bitcoin or not, you have to respect that. That's for sure. So I want to get into some very interesting conversations, but let's talk about kind of the topic du jour here and what's going on with Saylor. I don't know if you have an opinion on that. If you don't, that's fine. And then more recently, I guess, what's going on with Cohen and GameStop and them kind of taking the same approach with their balance sheet. I just kind of see it as financial engineering, but a lot of the people in the Bitcoin space see this as a game changer.
Yeah, and I would say the majority of people in the Bitcoin space and the majority of people around the world are looking at Bitcoin or anything else as an asset priced from a fiat currency.
Right.
And so they're pricing Bitcoin from the system that has to centralize. That's what I just described is they're pricing gold from the system that has to centralize. They're pricing everything from the system that has to centralize because the existing system is insolvent. And go ahead.
Jeff, explain that because you're going to lose the audience right there. So guys, what Jeff is saying is it's a centralized system and it is insolvent because it's based on debt. And what he's saying is therefore that centralized system, whether it's the Fed printing money, whether it's the banking system printing money, it doesn't matter who's doing it. It has to continue to create more and more currency units, call it inflation, if you want to use the Austrian definition, in order to satisfy the existing debt. You just need more and more and more and more and more. And therefore, to reduce that debt burden, you need to create not just more currency units, but you literally need to have more consumer price inflation to increase the tax revenue relative to the amount of debt that's outstanding for the government.
Yeah, you just nailed it. And so if you said the entire $900 trillion of assets globally priced in US dollars, what's on the bottom of that holding it up is the debt and that debt is exploding, and it has to continue to explode. Otherwise, every asset is worth zero. Every asset, and everybody inside that bubble. In other words, all of your time and energy are inside that bubble, making trades within that system of I own more houses, I own more S&P, all of that, all contingent liability on that debt expanding forever. And when I say debt, I mean debt that cannot be repaid, insolvent debt, insolvent credit, because the system that you live in and the system we all live in, if you're pricing from that system, requires that to exponentially expand. Right. Why exponentially expand? Because the natural state of the free market is deflation. And in other words, prices should fall. You only use things that provide more value to you. So you are a part of the system that entrepreneurs go and try to create value, and they fail if they don't give you more value. And you only use the things that provide more value. And then then you will use all the AI tools, and if the companies don't provide AI tools that remove more labor, you won't use the product because it'll cost way more in the free market, and you'll use the one that costs the least. Right. So you are a part of the process that is natural, the natural process in humankind, that everything we create competes with everything else that was there before and creates more and more value for us, or we wouldn't use it, it would fail.
Okay, so I think I need to stop you there as well, Jeff, because let me just put that into layman's terms. So everyone that's watching this right now, you are your income, your net worth, your purchasing power, the assets you hold, they are all part of a system that has to continue to grow exponentially as far as the amount of debt, therefore the amount of currency units. If it doesn't grow exponentially, it's going to collapse like a dying star.
2-0.
Therefore, your purchasing power, your net worth, your balance sheet collapses like a dying star as well. So what happens in the natural state of a free market, this is deflationary, where prices are going down. So in order to combat the natural state of a free market, you have to have this centralized system that's always fighting it. It's always fighting it, and therefore it has to act as a counterbalance. So let's just say that naturally prices would be going down, accruing the benefit disproportionately to the poor and middle class, by the way, by 2% per year. Well, the system needs to create 4%, let's just say consumer price inflation, to compensate for the 2% deflation, and then to have a net 2% inflation to continue kicking the can, so to speak, down the road. So this is, and correct me if I'm wrong, but I'm just trying to put what you're saying there in layman terms, because a lot of people really won't follow it.
Yeah, no, that's exactly right. So if you just, and that's why this is so hard, because we live and price everything, or most people live and price everything from the system that's extracting more and more value. And as the technology improves and that rate of exponential AI and technology improves, the natural deflation rate moves from 2% to 5% to 10% per year. It means if you didn't work in that system, you'd get richer every year. Because
in other words, we're going to have more government control,
and
in order to combat
the other system has to control more and more. So now, right now, everybody's cheering for Elon, and I'm not saying he's bad or good or anything else, but they're cheering for ripping out the WFEF globalist state. But what they don't realize, by ripping it out, you're transferring it to a technocrat state. And the technocrats are way smarter. All you're doing is, because underneath that whole control system, and they're cheering on both sides of this, fighting on both sides inside the same system, that's stealing their power, because underneath the entire thing has to be a creation of exponential monetary units that just transfers power to the people who have the AI companies and the people who have who have the robotics and who have it's a direct transfer of the productivity that should come to you naturally to somebody else through theft. And all the people fighting within it are making it stronger. And they don't know they're making it stronger. They think it's that other person on the other side. But if you have a game rigged that the entire structure has to do this, no matter who is on top, then you're playing by the rules of that game.
Okay, so where I would have a slightly different view is incorporating velocity, because I've done a couple whiteboard videos where I've really gone into kind of a deep dive on if $10 can pay off $20 in debt. And it can if you have the velocity. So I think there is, in a perfect world, just if we could pencil it out on paper or create a computer program, I could create an environment where you wouldn't have to have the exponential growth in the amount of credit, debt, therefore currency units, because the currency units are being created by the credit and the debt to begin with. But is that realistic based on what we have in practice? And I would say no.
So that's a beautiful way to ask that question, because these these conversations are so nuanced because we're using old frames of reference to try to make sense of the world we live in today. And what you just did is probably you could, in some sort of optimal way, to make that repayable with increasing velocity forever. But the increasing velocity can't happen because of the misallocation of capital.
There you go.
Right.
And regulations.
And regulation. And why is the regulation and increasing regulation misallocation of capital? It's caused by the same thing.
Yeah.
So
therefore, we need a decentralized system in order to extract that burden, that ball and chain on the free market, and therefore we could potentially then have a system where you would have that velocity. But in that environment, I'm just thinking through out loud here, Jeff. It really, what's most important isn't necessarily a fixed unit of currency or quote unquote money. It's really more so the decentralized system. That's what is paramount here, because that's what allows us to transact with one another without the involvement of the central planners and the authoritarians.
Yeah. So this is now, if we get to Bitcoin on this, we can take as many steps as you want and keep pulling me back. But I probably spent 10,000 hours, maybe more than that, trying to disprove Bitcoin from this. Because if it was a structural system change that we'd never seen before, and we've always lived in this other system that creates greater and greater chaos, then goes to war, then resets the system of money.
Right.
Says we promise never to do it again, and then it starts to do it again. That's what you should expect to see out of society, out of a global system that's actually always been exploitative. And what that also means, though, is throughout history, we always, because we're part of, like, there is no economy without us as purchasers and producers. Mm-hmm. So we have to be part of both systems. And so when you ask your audience, when you ask every single person of the audience, ask them at what point that they're yelling at the system that's centralizing, and at what point would they say, if they stopped printing money, even though many of them will say, stop printing money, let's go to gold, let's go to hard money. At what point, if you let the entire system collapse and all the debt reset, would they beg for more printing? And every single person would. So we believe that there's some they.
And let me just explain that, Jeff, because, and what he's saying there, guys, is because that would create something that made the Great Depression look like a picnic.
Like an absolute picnic, right? Because into that void, somebody would print and take control, and because it's a control system. Yeah,
and all the people would vote for that guy.
And you would beg for them to. So it has to be. It's not them. It's us. And so if we keep on going on that road, what I realize is, okay, we've always lived in an exploitative system, where the local maximum of that exploitative system, if we were in the more free market that was stealing more from other nations, we didn't see it because we buried our head in the sand and we could think we were better than them. Sun never sets on the British Empire, right? You have exploitative system all over that's why this never, you put slavery all over the world and you extract it. And inside the British Empire, they don't see it as much because they're winning as a result of others losing. Zero-sum game. Then the thing that created the U.S. empire was I wanted all the people who wanted to get out of that system, who were not the top of the control system, individual rights and freedoms, and free markets are more productive. So all of the people all over the world moved to the U.S. because of the individual rights and freedoms, and that system was more productive. All of and it attracted capital, attracted talent, and attracted automotive industry, technology industry, everything. And then it too became exploitative, just like every other system does in the world, and it has to extract from other people around the world as a different zero-sum game. And so, if the world's always looked like that, I had a really high bar for Bitcoin, because gold could get extracted, it could get centralized, and it always did. It got repriced and centralized. And my initial dive into Bitcoin is not it might get centralized. it would get centralized because we would make sure it did.
Mhm.
Right. There was no, and you and I, this is actually the interesting thing because in past interviews, we've explored the edges of this conversation, but not in Colombia, you and I spent 3 hours exploring deep this conversation, because for me, it came down to a point. If we were part of the centralization and we always took the short term rather than long term, then how would I expect Bitcoin to act within that? And it would mean Bitcoin would get centralized at some point too and fail. And that was in my initial.
What's your definition of failure?
If it got centralized and you would essentially had, think about the US on gold, you had imperialism 1.0. Then gold broke. You had to remove gold and you had to make the petrodollar system. You had imperialism 2.0. And right now you could go to imperialism 3.0 on Bitcoin. That is what's happening right now. And countries are racing to accumulate more Bitcoin and centralize Bitcoin so that they can have more control, a control system that extracts from others. I don't think that'll work.
That would be the definition of failure, is if you get past the point of no return. And velocity for the central planners, where they've hoarded enough to where they can still, but could they do that?
So
because it's decentralized in the nodes, and that's kind of going back to the conversation we had in Medellin.
So that's the point. And these are deep conversations. It takes a lot of time to understand how this protocol works, to understand how it's been attacked many times. So the whole Bitcoin's bad for the environment, the whole China's going to shut it down, every single thing the Biden administration and their choke point, all of these things, FTX, those are attacks against Bitcoin, attacks against the thing that restores individual rights and freedoms to every human being on the planet, but does so by attacking a central controlled structure. So if you just think about what that means for the central controlled structure and what that means for what all of the conspiracy theories, that many of the conspiracy theories are right in what this looks like, this animal looks like, because it's based on distorted money. It's based on more and more distorted money telling you what you can do with yours, right? And so you would have to expect an attack level that is so crazy and an ongoing attack level that would convince a whole bunch of people to give up their right to self-sovereign. But when we go into Bitcoin, at least in holding your own keys, and then the nodes that run this, all the nodes that run this. So I'll show you as just while we're online. So this is a visualization of the open source software that's Bitcoin that my node is running. Okay. And it has every single thing, every single transaction that's ever happened. I could go back in that visualization, and it's live. And every 10 minutes, my node will confirm that everyone played by the rules. I could go back to the first block, Satoshi mined, and my node runs the entire thing. Those nodes are distributed all over the world, and many behind Tor browsers. And I'm outing myself that I run two right now, but nobody can change the rules without my permission, and I'm never going to change the rules of something that's not in my best interests. So because those things are decentralized all around the world, and that's also what creates the confusion, because people try to make changes, and there's this army of people ensuring that it's decentralized and secure. They're like, it's crazy. And when you're in Twitter, you see different points of view. You see points of view on people with lots of money trying to get a Bitcoin improvement protocol to be able to centralize, and marketing and Twitter bots, and you see an army of people who try to get it to change.
Yeah,
exactly over my dead body, right? And because it's decentralized and that's holding, so the miners aren't in control. all the miners do is, because if my node doesn't confirm that block, a bunch of nodes don't confirm that block, the miner doesn't get paid. And so people think that more money in the system or more control works like the old system does, the system that they're in. But it works exactly the opposite. In no amount of money. I suspect Saylor doesn't run 100 nodes. I suspect he runs one, if he runs one. So he has one vote. All of the people contributing their Bitcoin in his ETF or into any ETF, I'll bet you they don't run nodes. So they don't have no vote.
Right. So just to come full circle here, your point is you don't care what Saylor is doing. You don't care what Cohen's doing, because at the end of the day, it doesn't matter to what's most important, and that's the decentralized network. Yeah.
But I do care about this. I care very much, and I spend a lot of time on this. So if the natural state of the free market is deflation, and we both agree that is the natural state, but we also agree that we've actually never seen it for a long period of time because we give control away to somebody else. So that's a natural state. It should be what the world sees, the globe. And as you add more minds, add more humans into that, more ideas, because it's more productive than a and it's always more productive than a centralized market. As you add more minds, you should see faster deflation, right? So the world you should see is the world I'm describing, but that means that what could actually expose that if we wouldn't let that happen? What would impose a new regime on our mind if we weren't used to it? And that's what Bitcoin's doing. So if you measure prices in Bitcoin, you'll see prices are falling globally, everything. They're falling on energy, they're falling on houses, they're falling on gold, they're falling every single asset, every single thing from that other system, it is falling in Bitcoin terms, which is it?
Because let's pull on that thread a little bit here. Let's assume for a moment over the last, let's go back to 2020 and pre-COVID. And let's assume that everything was priced in Bitcoin. Would we have seen prices denominated in Bitcoin go up or down? And where I'm going with this, and this is a very, from what I see on my Twitter feed, and that's just anecdotal evidence, it's a very difficult thing for people to get their head around, that once you price goods and services in a specific money, gold, Bitcoin, silver, whatever, the only way that money can grow in value is through deflation. And that means, and the only way to get more deflation is if we have more goods and services. So you see where I'm going with
I know exactly where you're going, and trying to pull both of those things out, because part of the why people are measuring Bitcoin in the fiat instrument is because you're printing an exponential amount of money, and they're seeing Bitcoin rise against that printing. Right. And right now, Bitcoin's kind of sideways, choppy, because liquidity is tight all over the world, and it's going to cause a deflationary spiral, at which point the governments all over the world are going to print boatloads of money, and Bitcoin's going to rise like crazy because it's so that's a part of it, and it's a big part of it. But the thing I talk about all the time is, what would the world look like in honest money?
Right. So over the last, let's say, 4 years, we've had, let's just say, compounded in the United States, whatever, 30, 40% consumer price inflation. So if things were denominated in Bitcoin, I know the dollar value of Bitcoin has gone straight up, but would the price of stuff denominated in Bitcoin, would that have gone straight down to the same degree to which the dollar price has gone up? I would argue probably not.
Yeah, this is not the same degree, but these are hard to grapple with exactly, because the systems are so chaotic together. And
Right. It's counterfactual.
It's a counterfactual. But so just as a place of reference, my home at the lake went from 1.4 million to 2.1 million in that time frame, and it went from 300 Bitcoin to 22 Bitcoin in that time frame. So it went so you could say it one of two ways. The house value, Bitcoin has an IRR, non-counterparty risk rate of IRR for 15 years of 45%, and compounded annual growth. And you can hold that self-custody away from the existing system. It's the only non-counterparty risk. It's the only thing that's not in that triangle of all assets denominated by that debt, because you can pull it outside. It's bounded by energy, decentralized, secure, and you can run a node that proves everything that I just said. So it's the only thing that's outside of that. And my house has a compounded annual growth rate of about 6.5%. So what you could say by that is I'm losing, if I'm building in real estate, I'm losing 39.5% or 38.5% a year to Bitcoin.
Well, you have.
I have, right?
You don't know what happens.
And we don't know what happens in the future, but another way to look at this is if this, and the only thing that matters on Bitcoin is, does it stay decentralized and secure?
Right.
The only thing. So we should, instead of spending all of our time, do we like it? Do we not like it? You have a protocol bounded by energy. Protocols develop in layers and give more and more functionality in layers, just like the internet. We're using all of the information on top of the internet to be able to touch millions of people right now. And 20 years ago, we wouldn't have been able to do this. You would have done conferences and such, and a lot more money to touch those same people. Now we can do it in a click of a button. And so we can see we use things that give us more value. In what's happening in Bitcoin, that's happening. And those protocols are winner take all. You have a choice. You could be North Korea and shut off the protocol of the internet. And a protocol, there is no second internet. What Bitcoin as a protocol is building in layers and is imposing a discipline across the entire everything else we believe in. And it doesn't care if we believe in it or not. It's imposing.
But it's only imposing that discipline, Jeff, insofar as people choose to transact in it.
So,
right?
so a couple different levels on this, and I think where you're going, you're way deeper than much of your audience would be on this. I think we need to take it in layers first.
Okay.
So let's take that first layer. In a world that looked like this, and everybody's measuring from inside that unit, and all of those assets are going up in price by the debasement of currency, and they constantly have to. They could go down for a little while there's a credit crisis, and then much more debasement of currency. As people get destroyed in that, they will obviously see the thing they can't be destroyed in. So people will buy Bitcoin, the energy-backed protocol, right?
Yeah, I'm keep going, but I'll circle back here. My experience has given me a different view, let's say.
No, I'm taking what I guess I'm going at is, we wouldn't be having this conversation about Bitcoin unless this was true for you too. I'm assuming you probably hold it. You probably even if it was. So we wouldn't be having this conversation if it wasn't becoming. And this conversation about how broken the other system is and the control structure is in a free market, or in any market, people make rational choices. And as you distort the money more and more, they make choices to get out.
Right, but let's pause there, because I agree, people do make rational choices. So in Argentina right now, they're choosing to hold dollars, and believe it or not, they're choosing to hold pesos above holding Bitcoin or gold. I mean, I know that I drove across the damn country and I tried to transact it and not just buy stuff for Bitcoin, but actually trade the Bitcoin and the gold and the silver for their hyperinflating currency. Yep. And it was incredibly, incredibly difficult. So you have to ask the question, if that was true, which it was, I live streamed it, why were people making a rational decision to hold on to the dollars or pesos? And in my view, Jeff, it boils down to utility, because there's more than one reason to hold on to a currency or form of money. We just get focused on the store of value, store of value, store of value, store of value. And that's great, but there also is a utility component to it. And often people choose the utility. That's a rational decision for them, even if the currency is not a store of value. So I guess my question would be, where are we in the evolution of Bitcoin and the ecosystem and the infrastructure to where it will have the same, if not, and I think it's going to need more utility to actually outcompete the dollar monetary system we have right now and incentivize people to start using it, transacting in it. And that's what allows us to start pricing stuff in Bitcoin. And that's really where the magic happens. Other than that, it's just a store of value, which I still think is a big win, but so, it doesn't really.
So you're going to a spot, and I want to spend a lot of time on this spot, a lot, because the spot you're going to is critical. If Bitcoin isn't used as a currency, it will fail as a store of value.
Why is that, Jeff? Because I think it's still.
Let me go there in a second. But first, let me agree with you. In Argentina or Venezuela, why don't people make that when they can see that the centralization creates socialism? The socialism gets dictators move in, and all over the world, and they keep on voting for more and more government spending and more socialism, because the same thing that creates the rich creates the poor by stealing their money, and most people think there's a solve within the system, and they make it stronger. And all of those people trapped in those countries, we look at those countries, U.S. looks at those countries and go, I can't believe they look like that, and the crime and the streets and whatever, when it's happening in your country, just at a different rate. All you're talking about is the rate of debasement rather than is the debasement there. And so it's mind numbing for me so what you just described, what people do, the vast majority of people, they get trapped in that system. And from that system, they keep on making the same mistake and make it worse and worse and worse. So when I look at human nature tied to this and what's happening, this is a system outside that system. Most people will get trapped in that system or pricing Bitcoin from that system and get trapped in that system. And because that's what happens all over the world. And it's always happened. And they go and they believe that there's some person inside that system that's going to save them, but then enslaves them. Always. Human history is riddled with it. So I agree with you. That's why it looks like it does in Argentina. That's why it looks like it does in the Congo, many other places in the world. And that's how it looks like that in the US. You just don't know it yet.
Yeah. So, but again, I think the point there is the reason people are rationally making that decision in Argentina is because those hyperinflating pesos, or the dollars especially, have a utility, to them that currently Bitcoin does not have, or they don't see it. Yeah. And if Bitcoin, I think it needs to be, let's say 10x superior in terms of utility. So that will incentivize, because it's so much better because you add that to the store of value, that people will move over there without us having to yell at them and tell them how stupid they are for not transacting outside of a system that is meant to steal from them.
Yeah, and this is where we go into, okay, how is the protocol developing? What's the base of the protocol? And then what are humans understanding what that looks like? And what are they? Yeah. So
and then also let's not forget to touch on why you think it needs to be a medium of exchange to continue to be a store of value.
Yeah. So let's start with kind of how the protocol is, how most people are looking at Bitcoin versus what it is. So I hold 5 things together on Bitcoin on what it is to me. Everyone is different, but open, decentralized, secure, protocol, bounded by energy.
Okay. Yeah.
Those 5 interconnected pieces are critically important, but I'm going to just point on protocol for one. Because I would say most people think about Bitcoin, think of it as a technology. And technologies are winner take most, until there's a new technology that replaces it. So what would that look like in a world that was going through this chaotic transition from one system to another? And you had this protocol that is winner take all, but most people thought of it as winner take most, and they could easily be convinced that that's the old tech. I have new tech that's better, right? You would see all the crypto scams, you'd see all the nonsense, and you'd have to ask yourself, why are these better? What do they do? And then the more scams there were, that would conflate people's mind about what Bitcoin really was as a protocol. Mm-hmm. And they would want to tune out because there's just so much noise and so much nonsense. It would look exactly like it does if this was a protocol. And most people would be right, because most of it is just complete scams and nonsense. So now let's look at then, and that's why I use TCP/IP and really TCP/IP. That part was 83, but if you actually look at it, merged a couple of things. And if you look at that, the growth of the internet started in 69 by DARPA, which was the original TCP/IP. And what protocols do is they do something very narrow. And that base of the internet was created to survive, so you could have communication in a nuclear holocaust. Did something very narrow, and then because it can't be attacked because it's so narrow, and it gets stronger and stronger and stronger, then emerging on another layer, tethered to it, gives more functionality and opens up more and more functionality. That protocol stack from 1969 to 1989, when Tim Berners-Lee created HTTP, was everything that you live on top of in the internet is that same protocol. So what we're doing right now is on top of that same protocol stack. And it took 20 years for the building blocks to create the functionality that then other people could create companies on top of it. Now think about where the internet was in 1989 and how many people misjudged the internet, even though all the building blocks were there. Then entrepreneurs went and built value on top of that, and they failed tons. Remember 1999, remember all of the iPhone came out in 2007. We forget that it's built on top of all of this same protocol stack, and that it delivers more and more functionality. Remember the internet in the 90s? And you couldn't do very much, right? But you could see the people that were really part of it, and I was early in that. You could see what was coming. And so the same thing's happening in Bitcoin. The first layer, the store of value that we're talking about, you could say the only thing that it does, the important thing, is decentralization and security, bounded by energy, right? That's the thing. It does so, and it has some compromises. It can't scale on the first layer. So if this thing couldn't scale on the first layer, just like if you said
because it's slow and expensive,
it's slow and expensive.
Right.
If this thing couldn't scale on the first layer, then it would naturally create in a free market a whole bunch of people trying to say, I have something that's better, right? I have something that could scale. Ethereum, I have a world computer, I have a different
form of money.
But it achieves to stay decentralized and secure. That's a design choice,
right,
to not scale.
Right.
So what and why would you need a centralized blockchain? You would never use that, because
we already have one, Jeff.
It's called a database. It's SLQ.
It's called the current monetary system.
Exactly. But
it's a ledger, guys. It's a ledger.
It's insane. There is no other use for a centralized blockchain because it's just a high-cost database. So when people say these things about all of these other coins that have to centralize, it's just so ludicrous to me.
Right.
But then and then so what would that build on top? Now, what would it build then over time? And it took till 2017, 2018, when Bitcoin could finally start to be a payment medium of exchange. Now, 2017, we had the block size wars. And why were the block size wars happening? You could argue two different things. One, a bunch of people who had control at that time wanted to control Bitcoin, right? And Roger Ver and a whole bunch of others, all the miners who had the most of the control, they were the heroes of the time, and they wanted bigger blocks. And the nodes fought them and said, no way, because bigger blocks will mean way more compute power and centralization of the compute power, because the amount of money it would cost to run the node would be 50,000 a year, 100,000 a year as this thing scaled, to be able to audit the entire thing every 10 minutes.
And the argument for the bigger blocks was to create the efficiency and the lower cost.
No, exactly. No, the argument for the lower blocks was let it scale on layer one, right?
Yeah, that's my point.
Yeah, so more payments. And so you could argue on one of the, so inside that argument would be, we have to scale it at a currency, and that would be and there would be that would be right? Because that's true too. But the cost of scaling it at a currency on on layer one meant it centralizes.
Right.
And so the nodes won out, and they said, and it didn't matter how much money you had, and you couldn't convince the nodes to centralize, no matter what. So they only confirmed the transactions from the miners that were the honest actors in Bitcoin. And then you had a chain split, and you had, at that time, you would have had one Bitcoin Cash and one Bitcoin, and you can see what the market has determined by this decentralized, because the Bitcoin Cash has collapsed in price, collapsed. It's nothing, right? And Bitcoin has gone to $88,000 US today. So you can see this happening, and it'll continue to happen, and there'll be lots more attack vectors. But now, what would that look like on then Lightning at the second layer, right? Or Liquid, or a bunch of different companies and different protocols connecting into Bitcoin without another coin. You don't need another coin. It's native, and it's connected on a second layer. What would it look like at first? Just like if you follow the path from TCP/IP up to HTTP, what it would look is a whole bunch of people trying to stop it, to try to centralize, a whole bunch of people having different alternatives that were faster money, faster everything else. And at the beginning, it would look like a backyard garage project, right? And what Lightning looked like at that time was, and I actually admit, when I see people looking at it, there were, at that time, the way that the Lightning nodes were created, because they were run by a whole bunch of Bitcoiners that cared so much about the decentralization and security, they wanted to run their own node. So all of these things were built like I consider it like a road network that only had backlane one-way roads, because you had to be connected to you, and that meant the liquidity in this network couldn't be found, and that meant payments often failed. They failed 60% of the time early on.
Right. So that was the cost benefit back then.
And
what year was this, Jeff?
This was 2018, probably 2018 through 2022.
Okay.
And it gets better and better and better, and then it incrementally gets better as it professionalizes. The second layer gets stronger and stronger and stronger, and all these entrepreneurs and ideas make it and remove bottlenecks. And so today on Lightning, you have payment success of, I think, 96%. But that's just new, right? And it will be 99.999, but payments have to be successful all the time.
Right.
And so it makes perfect sense in a world that's emerging like this, but most people want this works today, to not understand how this is emerging and taking everything, because they're looking back and they're hearing all this noise about what Lightning used to look like, about what it how it didn't scale, and they're not using it today. But Lightning right now is touching 650 million people in the world. It's growing faster than the internet was in the 90s, the second layer on top of Bitcoin. Now, not everybody uses Lightning. A lot of people are using Tether and other things that are centralizing, because in their mind, they want a US dollar. Just like this. And so
it's not just in their mind. Let's try to give them credit for being rational, because most of these people, Jeff, their input costs are in dollars, or so they can't, based on the options they have, they don't have the ability to price things in Bitcoin. Therefore,
Yep.
accept it.
Yep.
So it's still a rational decision. It's not like they're just completely crazy. And
100%.
And I'm not saying that you have that view, but a lot of people do. And so, because I think that takes us to the next step here in trying to analyze, okay, we're almost at a point where the infrastructure is there to where we would have a similar type of utility as far as just on a retail level. I don't think on a banking level yet, but on a retail level, we'd have the same type of utility. So then the next problem becomes the volatility versus the currency that your input costs are denominated in, whether that's a business, whether that's a homeowner with a mortgage payment, just putting food on the table, whatever it is. And that, I think, is an even bigger challenge, in fact, a way bigger challenge than creating the infrastructure, although the infrastructure has to exist first. And that's where we get to what I call a closed economy, where you've got to have, you need these offshoots. You need these, part of the network here. You need these economies that are pricing everything in Bitcoin, and they're creating all of their inputs themselves. And then they become so productive that they, and this is all over the world happening, they become so productive that they're creating so many goods and services that they're able to sell to other people where all their inputs are denominated in Bitcoin. And that incentivizes the other people that want to transact with them to hold Bitcoin on the balance sheet. And that's how a currency, no matter what it is, or a form of money, really gets mass adoption as far as a medium of exchange. So that next step there with these closed economies, I think that's where we have to go with this. I don't see any other way. Do you?
No, I don't. I think you tackled that really well. I don't even know if some of the audience will know how well you tackled that and why that would also create a centralizing system too. So let's use Tether or any stable coin. How does a stable coin achieve its stability? Guaranteed losses against Bitcoin. That's how it achieves its stability through guaranteed losses against Bitcoin. Right. And you have to say that over and over and over again.
Okay, but again, that assumes, this is part of the conversation meta as well, is that demand for Bitcoin stays the same. And I'm not saying it won't. I'm not saying it won't, but we're making that assumption because when we get to halving, remember we were talking about that at the hotel? Yeah. When we get to halving, that makes it more expensive. It's just like the cost of mining gold going up, if you will.
It's supply and demand. It's simple supply and demand.
We have to have that demand, at the very least, stay the same. Yeah, and then that's where you get the assumption that the stability costs you. There's a cost for that stability versus holding the Bitcoin, which currently is more volatile. Yeah. So the volatility is part of this, and why the volatility is necessary, and because of the understanding and what this is people are trading. Ask yourself, if you're in the audience, ask yourself, how much of the time are you spending in the existing system, pricing everything from the existing system that is debasing? And how much time are you spending yelling at other people and having it co-opt your attention? And are you worried about AI, where it's going? Co-opt your attention, it's centralizing more. And you'll find it's most of people's time. If they were actually honest inside that system and how much time they're spending thinking about other people inside that system versus, and what you realize is this conversation that we're having right now, it's like in the one we had in Colombia, how many people in the world are having this deep and all of these different and understanding what we're actually talking about at this level from a different system design. But that early, because it's so early and so many people are just kind of, very few are moving their time, and more are moving their time, and more are moving their time. That is the free market demonstrating, which will be volatile against the other system, but it will be very volatile against the other system. The other risk of exactly what I'm describing is
if you want to run Bitcoin and run a node, you are part of the network that keeps it decentralized and secure.
Yeah.
The things we're doing at EcoDeath are part of the network that we see all the risks. We spend all of our time on the risks, but I'm not going back to a centrally controlled system ever, no matter what. I spend most of my energy and time I spend every day in Bitcoin. I'm influencing the world I want to see instead of the world based on cheating, exploitation. And so I've moved my time into that and to that. And from moving my time into it, I can see a lot of other things that are coming, and I get to invest in those things that are coming in the free market that many people stuck over here wouldn't see. And from that point of view, if you saw what was coming and if you saw how it solves, it's early still, but it solves a lot of these things that people are thinking today, you wouldn't have the same view. You wouldn't be so stuck. But it takes but you're right. Some of the things that you have to expect, some of the things. So how could you retain privacy in a system that was centralizing more and more and had to come and attack you, right? And if Bitcoin is open and all of these blockchain transactions at the base layer are not private, then through that lens, you as well, you could see why people they also wanted privacy coins. They didn't think Bitcoin was secure enough because it couldn't withstand the threat of big government in that. But when you see what's happening on Bitcoin in layers, and some of the privacy that's building in layers like Fedimint or Cashew to turn this into a native currency that nobody can stop. Nobody can take your money. Your communications cannot be hacked in this. Then you start to, and it's growing so fast, right? But but I understand why this would be chaotic to understand. Or
it's not just chaotic because, again, I want to dive into, if it's not a medium of exchange,
okay, perfect,
then it's going to lose its store of value because I've said this before, but in my view, there's an incredibly low probability that it becomes a medium of exchange unless we're talking about an economy that is a closed system where everything is priced in Bitcoin. And you're only going to get that if people are willing to effectively live like the Amish, right? It's for a short time, right? So because you have to have all this stuff that's grown, all the stuff that's produced, all the stuff that goes into making the widget. You have to have that all done within this community. And how many people are going to be willing to lower their standard of living? And for the viewers who aren't following that, the reason I say it has to be a closed community where everything is denominated in Bitcoin, because that's the only, unless you've got a business where your margins are 75%, right? If you got a business where your margins are 75%, then absolutely you can go ahead and price some things in Bitcoin and keep that on your balance sheet, which a lot of people might do. But in most of the business world, you're running at a 5% margin. And therefore, you just cannot take the FX risk. You cannot take the risk of pricing something in Bitcoin. And therefore, let's that delta that could come in with those inputs. So that's the real challenge, is how do we, are there enough people on Earth that are willing to go out there and live in an Amish community just to start what was the United States, let's say, whatever, in the 1600s.
So I don't think it looks like, I think part of what you said is exactly right, and part of what you said, the Amish community is wrong. So okay. and I think it's because you're looking at a light switch when it won't look like a light switch at all. It's going to be a hard and chaotic transition with
each. But tell me how that transition works when we've got that problem of the delta or the volatility between what you're pricing your goods and services in and what your inputs are. So
let's for sure. So what's coming to the U.S. in time, just like what came to Argentina, is massive volatility. Because it has to be, because the system's unstable. So it's just a different type of volatility. Your money's getting eroded at a crazy rate, and that has to increase. So that volatility is going to be part of it anyways, right? And you're measuring everything from that same US dollar, and you know that's true, right? That volatility has to increase. It's already increased in the last 20 years. So that increased in the last 5. It'll increase way more going forward. Way more. It has to, because technology is the opposite. It's supposed to be freeing you. That system has to create that volatility. So volatility is there no matter what. And as more and more volatility enters into that currency, more and more people are going to be attracted to the one that is protecting their value. So that's part of it. Let's use you or me or anything else. So I'm not going to use me because I spend in it every day, and I charge in it and a bunch of other stuff. But let's use you. Today, anything you create value for somebody else, and you charge a fee, and you charge a fee, and you pay it. You pay it somebody Visa, MasterCard, bank fees 2.5% to be able to take payments. You're being charged to take payments on a system that the money is worth less over time. Right? That's what you're doing in everything you're doing, and you know the money is going to be worth less and less and less. And so you are going to, at some point, whether it's now or you're going to accept payments in Bitcoin. And at first, you'll probably convert them because you don't know the money is being, and instead of being charged to take payments, you won't get charged to take payments. So you increase your margin by 2.5%. If you increase your margin by 2.5% because you're not getting charged to take payments, you can give a better deal to your customers. Over time, as you do that, other people will do it too. Whether you do it or not, some people won't do it at all, and they're just going to get eradicated. But the people who do it and then hold some of that money will both be able to offer their customers a better deal and be able to retain their purchasing power. And they'll learn, because otherwise the free market is going to destroy them. They'll learn why that's important. And the others will be destroyed. And more people will make that choice. And then from there, after you've held a bunch of Bitcoin and you understand you're part of the node, you might make a choice to pay somebody else in Bitcoin because you get a better deal too. I can tell you. Let me explain that. And just before we go, and you please explain it because you'll do a better job than I did. But I can tell you for sure this is happening around the globe. You wouldn't have 650 million people on Lightning already at this rate and the rate of transaction volume if this wasn't happening. And I've been to complete pockets that are integrating with other pockets that are circular economies that are already doing this. So I know it's hard for people to see in their rich countries or in their poor countries and everything else, but there's pockets that already look like this, and they don't look like Amish communities. They look like vibrant communities.
Okay, so just to be clear, audience, Jeff is using circular economy the way I'm using closed economy. It's the same thing.
Yeah, same thing.
So let's use just my simple YouTube channel as an example. Right now, let's just say I have all my expenses, let's just use payroll for the editors, denominated in pesos. So I actually do have this exact same type of risk that we're referring to. It's just not in dollars and Bitcoin, it's in dollars and pesos, because my income and everything that I'm pricing my service in, if you want to look at the advertising, that's denominated in dollars. But it doesn't really bother me too much for two reasons. Number one, the volatility between the peso and the dollar is relatively low. So what that means is I'm not too worried about if I make X in dollars this month, then I have to pay payroll. Is that going to require, 50% more dollars? I'm not really, worried about that. And number two is because my margins are pretty good. So let's just say for a moment that I'm running at a 50% margin. So if my payroll is 1 month is $10,000, I make $20,000 from YouTube. You've got 50% to put in your pocket. And therefore, if I do get caught on the wrong side of that FX risk to where the peso appreciates against the dollar, then I've got quite a bit of buffer there, right? But you compare that to if I was denominating my service, let's say YouTube paid me a set amount of Bitcoin every single month, and my expenses, the payroll, is denominated in Colombian pesos. And now let's say instead of a 50% margin, let's just say that I've got a 5% margin. That is a much different equation there. There is no way that I could price or take that risk for pricing whatever it is I'm selling in Bitcoin, because I could get caught very easily. In fact, I probably would quite often get caught on the wrong side of that, where instead of a month where I'm making, that 5%, I've got a month where I'm losing 5 or 10 or 15% just because the price of Bitcoin happened to go down for that temporary period versus the Colombian peso, right? So what Jeff is saying here, and correct if I'm wrong, buddy, is you're going to start with businesses that do have that margin, that 50% margin, to where they can price not all, but some of their goods and services in Bitcoin. So then they can take that and then hold it onto their balance sheet as a store of value. And gradually, as that happens, that store of value increases to where there's more and more of an incentive for that business to price a percentage of their goods and services in Bitcoin. And it also gives an incentive to the consumer, because the producer is able to drop their price by not only the transaction amount, Amex, let's say, charge, or Stripe charging 2%, but also because you want that Bitcoin without having to take the dollars and then buy the Bitcoin. You want that Bitcoin because you feel as though, and your experience has led you to believe that that's going to appreciate over time, and therefore you want to hold that on your balance sheet. So you would be willing to drop the price of whatever good it is you're selling by, let's just say, 5% as opposed to 2%, and then that incentivizes the consumer to buy that product that's denominated in Bitcoin, and then you get the virtuous cycle. And I feel like Will Ferrell in old school, where he passes out at the end.
But funny what you just said, and you'd naturally think it would only be high margin businesses. But what I've actually seen is a lot of low net profit margin businesses like restaurants do this very same thing, but they're hedging their risk because only 1% or 2% of the customers are paying in Bitcoin. Right. And because so as more and more of those customers are paying in Bitcoin, they're doing the exact same thing, but they're hedging it in a different way.
But there, we're talking about something different, Jeff, because I'm talking about pricing your menu in Bitcoin.
Yeah, I agree. Yeah, I agree. I agree. They're still accepting Bitcoin as a payment. You're right. But the next stage, that'll take a long time, I think, pricing and the restaurant pricing in Bitcoin, a long time, but they're using the same. And I guess this is the way I would describe this, at least in my mind. A state change such as we're going through, if I'm right, if this stays decentralized and secure, that state change is going to be chaotic, confusing for all of us.
Right.
And each actor is going to make different decisions, be wrong, right, but it's a state change. It's like, and a state change I mean a physics state change, ice turning to water turning, where one thing doesn't look the same at all anymore, and all the rules, understanding the old system that you're used to, change. That's what this is doing. And so that means it's such a big deal. It has to be this chaotic on the way through. Because otherwise it wouldn't be a state change. We've always lived in this other state. It keeps on repeating through all humanity. It's always been this other state. So all of our minds, all of our history books, all of everything we've always known is in this other system. And this new system, open, decentralized, secure, protocol bounded by energy, doesn't care about our ideas. Doesn't care about what the other thing it is. It's imposing new rules. Now, can it stay decentralized and secure? Where are there areas where it could break? That's what we should be spending, or that's what people should be spending. But it's more the cognitive dissonance, I find, of us going through, holy cow, and actually why I really enjoy our conversations is because the same thing happened to me, right? The going through, it can't be. There's no way this, but if this is opposing these new rules, what we know for sure by all of these other countries that experience dystopian countries, we know the black market rate is the rate. We know there's a different economy, right? The posted rate, we know people fight, we know the free market still exists and people find their way out. We know what it looks like. And that's what you're finding. It's chaotic, it's confusing, but that's what's emerging on Bitcoin. The first global free market that's ever existed.
So tell me why it needs to be a medium of exchange in order for it to be a store of value.
I would love that you came back to that. Okay. So this was actually my number one risk of Bitcoin failing. And this has actually guided a bunch of our investment decisions. Going back and ironically, some of the things that you and people thought we were fighting on were out of this same thing. And what you were talking about, and we probably weren't tight enough on what we were talking about, is human nature always centralizes. Always has. Right. And so I agree with you, completely agree with you, and that becomes the risk. And so if this was only a store of value, what would happen? As if this was a store of value, it would centralize. What would governments have to do? They would have to buy more. What would you do as price skyrocketed in the currency? You would sell. What you would trust the government and their ETFs and holding the Bitcoin. I think 9 of the 10 custodians, including MicroStrategy, hold at Coinbase, and you would hold more. And you wouldn't run a node because you don't need to, because you can trust the government. They'll protect you. Right. And more would centralize into this. And many people holding Bitcoin today will get very rich and sell for the piece of paper and centralize further. And then because these systems are incompatible together, one is the free market, prices fall. One is the manipulated market, prices rise. They're incompatible. Then by doing centralizing into the system that's incompatible with the free market, you are making the system stronger over you. It will continue to automate. It'll continue to use AI. It'll continue to drive robotics, and you will make it stronger, and you'll centralize, and you'll think you're getting rich. Or Bitcoin holders today will centralize, and many won't run nodes. They won't care because they don't need to care because the government's got their back.
So walk us through. Now it's becoming a medium of exchange. How does it alleviate?
So now what would you do if you were? And this is going to get nuanced, and it's going to. But what would you do if you were trying to control the network? Let's say you were, and I'm not saying the U.S. is trying to do this or not. I'm just saying human incentives. That greed always wins out. If you could, that people will try, right? And what would you do if you knew everything I knew and you were trying to control the network? What I would do, if I was on the other side, is I would regulate it, and I'd say we're on side. It's a free market. We're driving where they're going to be the most Bitcoin, and then I would drive as much purchasing into it, so I controlled more of it. I would control the economic nodes as well as all the payments, and then I would make, years later, as a lot of these people sold and didn't run nodes anymore, and tons of transactions were moving into this. I would say if North Korea uses this, the miner can't mine this transaction, right? And the nodes would face a choice, right? Ban that transaction, because you can't ban Bitcoin. You can't ban Bitcoin from anybody. And the node, ban that transaction, or there's a chain split. And I sure wouldn't try to do that chain split today, like the Bitcoin Cash example before. But in time, if I was trying to do this, I would wait. I would make sure that everybody was on my system. And then when everybody was on my system and dismissed the rest, then I would say, here's what the rules are.
Right. So you would do the split in order to keep it decentralized.
No. I'm saying what the centralized structure that has to be based on top of manipulated money. Right. Because it doesn't resolve the problem. It has to centralize.
Right.
And it has to, at some point, attack Bitcoin, the decentralized nature. How they attack the centralized, I wouldn't do it anytime close to today. I would drive the price up. I would get people to trust me. I would do just like what you do with gold, right? Gold throughout there, centralize the gold. Don't worry, we can trust this bank. We have the gold in Fort Knox, and until you don't, and nobody cares about it anymore. And then you either reprice it or not. The decentralization and security nature is the most important point.
Let me just walk through that real quick. So if I'm the government and I want to put the kibosh on this, what I'm going to do, if I hired Jeff Booth as a consultant, what he would say is start accumulating as much Bitcoin as you possibly can, and then what you
one more I just want to add to.
Okay.
Or make it legal for all companies to do it, and then their custodians are centralized, right? So people are holding a derivative instrument of Bitcoin; they're not holding Bitcoin.
The government or
all the people investing in the ETFs and everything else.
Okay.
Holding a derivative instrument, they're not holding Bitcoin. The Bitcoin they think they own is held by somebody else, which is centralized custodian.
Okay, got it. So you're a paper claim on
a paper claim, just like a paper claim on gold.
Yeah. So the ETF, FITO, would be a great example of that. Okay, and so then what the government would do in addition to that would be to try to control as many nodes as possible. And if it was only being used as a store of value, there would be theoretically. It would be likely that there would be few actual people, individuals running nodes, and therefore the government can run more and more and more of these nodes to get to the point where they control enough of the network to where if they wanted to effectively sanction North Korea or Iran, they could do that because they control not just enough Bitcoin, but enough of the network. And then the libertarians, the Jeff Booth, the Lynn Aldens, need to make a decision. What do we do? And then you get the sane people that are fighting for the rights of the individual and privacy and decentralization. You get them all together. You say we do a split, and this new split, we keep Bitcoin the way it's intended to be, and as a medium of exchange, store of value, with all of the nodes running as it is today. Am I seeing that?
It kind of. It's. I don't know if we'll get into it on this. It gets more complicated, but yes, you're seeing it broadly connected. Because if all the economic nodes, if all the transactions are through centralized servers like Lightning is, then the incentives on the economic nodes for the miners will go to where the most activity is. So what you have to do, and this is something we realized a long time, you have to decentralize that far before people even know it's coming. When I say some of the work we've done and some of the companies we've invested in and what's happening, we've already built the counter to that narrative a long time ago. And it's expanding a lot. And one of the things that an understanding, and this kind of maybe goes deeper, once you've seen something, right? Once it's brought into your awareness, you can't unsee it. So part of the natural, even having this conversation of understanding the risks, and a whole bunch of other people starting to understand the risks, more and more people in Bitcoin are attacking those risks and making sure those risks never emerge. And we've been doing this for a long time. And why I'm so confident, or that I see the risks, I understand why people are worried about the risks, but I'm not, because we were not meant to live in cells. We are not meant to live under control systems. And that control system with AI and robotics would look so egregious to just about, and so what ends up happening in the free market is people see that what's coming, and they move, and they add their time to contributing to something that can't be. And like our relationship is out of that, right? That Lynn and my relationship is out of that. You meet these spark of lights all over the world. They're saying, no way. This is a global state change. We're going to live in free markets. We're going to allow the abundance from what we create for each other to flow naturally to people. And it looks very different. And you're being joined, why I get so excited about this or optimistic about this, is every time you have a conversation like this, and like you're in our basis of our relationship, we wouldn't know each other unless I made this choice. And then you meet more and more brilliant people that add their voice and also watch out for the risks. And so when I think about this kind of social layer of Bitcoin, what holds it, it's us. We are Bitcoin. You're constantly, and you're adding more and more people to it all the time that are vigilant against these attacks.
Yeah, right. Right. I know I know you've been very generous with your time, Jeff, and I appreciate it, buddy. I want to hear how you articulate the importance of putting the focus on the production of goods and services, because I said this earlier, but it's just people have been caught up in this system that you're talking about for so long that they just associate money, or Bitcoin for that matter, gold or silver, whatever, to wealth. And it's not wealth. In order for, if things are denominated in Bitcoin, let's say, the only way that we can have that productive deflation that you're referring to, the only way that your currency can appreciate, or deflationary currency, whatever you want to call it, the only way your money can gain value against more goods and services is if there are more goods and services. That's what Bitcoin is all about, for heaven's sake.
That's what it's about.
You can't forget about the goods and services. And that is one of my frustrations, I think, that why would Bitcoin allow us to do that? Because it gets the government out of the marketplace. And if you eliminate the government if you eliminate the government from the marketplace, then that allows that human ingenuity that you're referring to. And as a default, we're going to get more goods and services. But at the end of the day, that is what is most important. How do you articulate that to people that just that can't see it, that they can't look at it through the lens of stuff, and they always look at it through the lens of money?
Because they're looking at that asset class without the liabilities, thinking they're rich and getting richer and richer and richer, while they're getting poorer and poorer and poorer, while the world is disintegrating into that. I use an example in a speech I gave in Madeira, and most people wouldn't even know who I'm talking about here. But the printing press opened up, and you could say what the printing press did at this level of what we're talking about. The printing press opened up. You used to live in a massive control system. Kings, queens, pope, the religious figures controlled everything. You were a slave to it. Pecking order into it. Same type of system. Went to war. Who goes to war? You're kind of a pawn in that system. Printing press opens up an ability to contribute your ideas, to read other people's ideas, and contribute your own.
Right.
And what did that do? It opened up a renaissance, a massive amount of ideas that actually destroyed Galileo, church and state, a whole bunch of different ideas. Faraday, if people even know who Faraday is, Michael Faraday, had an idea that electromagnetism was all around us, but you couldn't see it. Had this idea that it was all around us all the time. So it was always all around us. Right? It was there forever, but nobody saw it. Faraday went to work for a bookbinder so he could read the world's greats and consume knowledge. And from that, he was a poor kid, poor working family, right? We worked for a bookbinder so he could become one of the greatest scientists. And out of that insight that he couldn't even prove, it was always there, but just in his mind, James Clerk Maxwell, about 20 years later, created all the mathematic formulas proving his insight that runs all of our electronics today, satellite systems, everything today. People don't even know about who these people are and how influential they've been on your life. They've been forgotten for most people through time. That they wouldn't have been found without the printing press opening up their ideas. Right. So now how many people, and that led to Einstein, that led to a whole bunch of other people, that we live on top of those ideas. And the abundance that we take for granted is those ideas. It's that free market of ideas. And you had very few ideas for a long time. Only these people mattered. And you opened up to more ideas. Today, we live in a global phenomenon. There's probably 500 million people extracting from 8 billion people on this planet. So it's still centralized. And printing press moved it to 500 million people, but it didn't move it to 8 billion. Bitcoin is moving 8 billion people in service of 8 billion people, and it's massively competitive. The free market, because if you have to create more value to get paid in the free market. That's what Bitcoin. And so as more and more people move to it, you have a faster rate of productivity, and the output has to be faster deflation. And more, and it's open for anybody to move to it right now. You could stay stuck in your jail cell, yelling at the prison ward to let you out, when the door is open. And most people are staying stuck in their jail cell, and they could just move their time to the first global free market that's we could ever imagine. 8 billion people in service of 8 billion people. And the output, like you naturally explain, has to be more abundance. It has to be more value, because we would only choose the things that are most valuable.
Yes, and I'm going to leave it there, but that gives me another idea, another thread that I'd like to pull on, because then we have to make sure that the people who are voting, because we're still likely going to have a government in that situation, and if the government starts to meddle, even though if we have perfect money that is decentralized, if they put up regulation that would inhibit the free market, then it is true. Then you can go somewhere else. We have a competitor. You can go somewhere else in the world. But that is another variable that we need to consider, along with, would the free market that you're talking about with decentralized money, would it lead to fractional reserve lending? And would it lead to a similar system that we see? And how would that be prevented over the long run? I'm going to Lynn's, what is that, rec cycle, something like that. So we're not going to have time to get to those talking points, but that's another 3-hour conversation we've got to have, Jeff. We've got to have, because
I would love to. I've thought about it a lot.
It's so much fun, and it just gets really deep. And the whole point of my channel at the end of the day, or the whiteboards or anything that I do, there's a lot of reasons I do it. But one of the main reasons is just to get people to think. And that starts with me. That starts with George Gammon. And so I just want to thank you again for not just the on-camera conversations that we've had, but the dinners and everything else, because you are someone that definitely gets me to think, and that's something I sincerely appreciate.
Right back at you. That's what a ride.
Yeah, buddy, do you have anything to plug? Do you have a website or the fund?
No. People can, nothing to plug. If people want, my website's jeffbooth.ca, but that's just if you want to contact me.
Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow rebel capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.